What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is October 23rd of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's update, we're going to be taking a look over cryptocurrency markets as well as my top 3 altcoin picks for 2020, which I forgot to do in the last update, and last but not least, take a look at the corporate earnings we've gotten over the last 24 hours to see whether or not the market is positively reacting or negatively reacting to the recent performance in corporate earnings. All right, so we've got a lot of things to discuss, but I want to let you all know our sponsor for today's video is Etoro. Now, for those of you who are hearing about them for the first time, Etoro is a social trading platform that allows you to interact with thousands of traders. And what better way to interact with those traders than to be able to see where they're positioned in the market? So if you register an account today, you can not only register a $100,000 virtual portfolio to test out your trading strategies, but you can also follow my virtual portfolio as well and see how I would invest in the market as well. And you can interact with thousands of other traders. So I recommend you guys register today, get a piece of the action, and definitely check out the Etoro platform today. Now, to take a look over the cryptocurrency market, we can see here that most cryptocurrencies are in the red right now, following a slight downturn in Bitcoin's price. Again, we're still seeing that general correlation here. There's a few oddballs that are really standing out and still outpacing Bitcoin, as we'll talk about as we talk about some of our top 3 picks. But the overall market right now, again, it's not a bearish case scenario. It's not a bullish case scenario. We're simply in a neutral territory. We're just pushing sideways, again, holding around that double of market capitalization from the lows, right? We set the low down here at $100 million. I wouldn't be surprised if we come down to 200 at the worst. Again, setting 2 times the amount of market cap as a new support level, right? Now, if we take a look, though, at altcoins again, we're still seeing altcoins showing a slight uptrend here, a little bit of an uptick where we're setting higher lows every time, even though we might have these small little pullbacks. And that is continuing to show in the continued decline in Bitcoin dominance, right? It's nothing crazy shocking yet. It's not what we got these past 2 times, right? Back here in January, or really December and January, as well as back here in March of 2017. And it might be that for a while, we're only going to get slight dips like we saw back here until we really kick in to the full swing of the altcoin cycle, right? So even though that may be the case, we are seeing a lot of exciting price action in our top 3 picks, guys. I'd say the one exception is Raven Coin, right? So taking a look here, this is basic attention token. It's my second play for the year, my second favorite play. And so far, BAT has been one of the best performing plays in the market this past week, where most altcoins have been relatively stagnant. Bitcoin has been pushing sideways for the most part. We have seen BAT come in with killer volume across exchanges and continuing a very nice uptrend here ever since back here in September. And I have to say, I'll be fair with you guys, I did move out of a lot of my BAT position into Link, as I mentioned the other day, back a few updates ago. But I have to be fair, I really shouldn't have done that. It was a little bit of, I guess, an eagerness to try to trade on Link, and I thought the BAT was overextended. I think the position I closed was over here towards the previous resistance point. And so far, it's been going higher and higher. It's back up about 300 sats since where I sold it. So that's a really good amount of performance, and it's actually outpaced Chainlink, which is my top 1 pick, and at least in the short term since the price action. Now, if we take a look at the weekly, guys, look, again, I think I generally made this mistake, and I mean, Link is still going higher, which is nice, and I've still made a return. But the thing to take away here is that for basic attention token, for Chainlink, for Raven Coin, I don't think most of you should be trying to day trade and stuff. I rarely do it myself. For the most part, I'm really just trying to swing trade in these 3 plays for the next cycle to really reap the kind of 3 to 5x that I think we can get compared to Bitcoin in the short term. And take a look at this. I mean, if we just stick to our weekly strategy here, right, we can see here the the squeeze momentum indicator showing lower bars here, rising back up to the upside. As early back here as August of 2019, you could see the divergence was declining the MACD. We get a cross over here in late September, and the stochastic RSI came popping up here September 23rd, right before we started to get the multi-week uptrend. And again, how you guys actually use these indicators, it will vary, right? I use these in a very specific way. I look for at least 2/3 of these indicators coming in on the weekly, showcasing to me that the trend is playing out. And again, guys, whether or not you believe altcoins are going to do well long term and everything, this strategy so far has worked really well for me. And it's not a good move to think that things can't reverse, that risk taking can't increase when especially if you're in the ball camp that I believe, and that is where we're in a market that's going to continue to expand. I believe that Bitcoin in the long term is going to set new highs, and we're entering into the next cycle, right? And you have to have that kind of mentality of looking for the opposing trend, being a contrarian when things don't look that favorable, right? And also understanding how the market's going to adapt. Not every single altcoin is going to come back. It's the reality of things, guys. But so far, I've been basically holding two of the best performers in the market, and it's something I'm very proud to say, because I'll be fair, I made a lot of terrible altcoin trades back in 2018 trying to trade during a bear market. But when we start stepping into a bull market, as much as it might not feel like it right now because of the correction, we are entering into the next cycle, in my opinion. So you guys may disagree with that, but I can tell you that is definitely going against the curve. We also have Swell Link, right? This is my top one play, my number one play for the year. Go ahead and pull this on the Bitcoin comparative chart. Still holding up towards its previous highs that were back here in June. We can see here on the daily, again, this is looking to press up, hopefully break out above, I think, this resistance level around 35,000 sats. If we get that, that's going to definitely kick in momentum. We're going to get above this previous resistance, and it's going to really start to get some tailwind. But if you take a look again at the weekly, keep it simple, right? Squeeze momentum indicator looking good. MACD got the cross. Divergence continuing to grow to the upside. We can see here the stochastic RSI getting back up here into the upper band, right? These are all looking good to me, right? It shows me that we've got a few more weeks here of momentum here for plays like Chainlink, for plays like Base Contention Token, and that these are the plays that the market is looking for. And again, I want to stress why I really like these cryptocurrencies, right? Chainlink has got an immense amount of partnerships. It is going to serve as very likely serve as a middleware solution for any real smart contract adoption, in the sense of being able to pull real world data outside of the Ethereum network and actually bring that in and make it much more practical to actually make use of smart contracts. And if you guys want more explanation of that, I talked about it in my top 10 altcoins for 2020. And in the sense of Base Contention Token, what's really nice is that if you own a BAT token, right, you own a general stake in the limited amount of tokens that are going to be granted out to users for their attention. And as we double or triple the user base of the Brave browser, or build more platforms where the BAT token is granted for certain amounts of activity, you actually are able to have more ownership of the ad market. It becomes more valuable because there's a limited amount of tokens and there's a growing number of users over time. They just reached 8 million users on the browser, and I think it's going to continue to expand. So I think those are the important perspectives to have in mind, guys. The fundamentals and the technicals look fantastic on these plays, and that's the whole gist here. We want to look for both of those. It's not one or the other, right? It's both of them. So anyways, just going on a little bit of a rant and rave, trying to explain my thoughts, guys. And this is, I think, why they're performing so well in the market, when you can have both of those coming into action. And outside of that as well, we'll talk about our last play here, which is Raven. Now, some of you as well have been watching, and we'll bring it here to Bittrex. The volume's not going to be as 100% accurate because a lot of it's gone to Binance. But we can see here, as we take a look at the weekly, right? Everything's checking out in the sense of our indicators, except I'd say probably the stochastic RSI looking like it might top over. And this has really been due to the fact that we've had a pretty big week of sell side action, basically closed down a week's worth of gains here. You can see here on the daily, it makes it very clear. But the nice thing I'm seeing here, even though I wanted to see support hold a little bit higher, I wanted to see it hold at 400 sats, we are generally coming down to the same support range we held before we had this mini breakout here. So what I think I'm looking for in this case is to start to see a curvature. I want to see all three indicators start to curve up on the daily, and I think that's going to make me confident that on the weekly we can hold the strength that we already have in these indicators. I want to see the MACD divergence continue to expand. It looks like it's flatlining right now. The squeeze momentum indicator looks good, but it's going to start to turn over if we don't get a good week's worth of price action here over the next few days. So I like Raven Coin, but I like to see when it moves like it does in the past, and we're not seeing that just yet. I don't think we're going to see that in this cycle. What I think is it's going to be a much longer term cycle in this case. It's going to be a nice long uptrend that actually seems like it's actually rooted in some fundamental understanding of what Raven Coin offers. And again, for those of you who may not know, Raven Coin is focused in this case of being a platform for digitizing assets, or digital assets in general. So it's basically going to be a platform where you can issue pretty much any token resembling any form of asset. And I'm really excited to see where Ravencoin goes in that sense. Again, it's a very early project, but I think it's very much tied to the cypherpunk-esque movement of being able to have a censorship-resistant network and exchange value peer-to-peer. I think it's a very exciting project. And it's one of many, I think, that are really leading not only the digital asset space, but generally also possibly the security asset place as well. So again, I would recommend you guys take a look into those projects. Now, in the sense of anything relevant in news in crypto, there really isn't much going on right now, or at least not that's getting reported on. One of the really interesting news pieces is that today, just in a few hours, Mark Zuckerberg from Facebook is going to testify about not only Facebook's involvement, but also more specifically discussing the elements of the Libra, or at least that's what I think he would hope to talk about, because we already have some understanding so far from the transcript that usually is put forward before individuals come up to testify before Congress. But along with that, we've heard from comments of the senator, from the congressmen who are going to be asking questions and basically questioning Zuckerberg, that they're going to be mainly focusing on Facebook as a company. And this is, again, why I think nothing's really going to come out of this. And I in a sense, I've told you guys, there's pros and cons to Libra. I don't see Libra as a cryptocurrency, but I do want them to have a fair shot at building something, right? I'm not about censoring people from being able to do these things. That's completely against the mantra of what we've talked about in the crypto space, I believe. That being realized, this is going to be yet another ounce of proof here, right? That builds on to this kind of plethora of points as to why I believe that the Libra is not going to succeed in the long term. The reason I don't see it succeeding is that you have to go extensively through regulators. They're a big target for Congress to watch for and overregulate and censor out from being able to develop these kind of technologies. These need to be rooted in open source. They need to be rooted in decentralized frameworks that, again, like Bitcoin or Ethereum, there's almost not a question of trying to extensively regulate or shut them out, because they're simply decentralized. They're simply open source. They cannot be shut down. And that's the really cool thing about it. I think that's the way that Libra, if it wants to survive, is going to have to go. It can, be in some ways compliant with regulators, but at the same time, it's not an approach I think that's going to work. But I do wish Libra the best in this, to have at least a fair shot at it, and we'll see what happens over the next few months here. Anyways, let's go ahead and talk about the futures. So originally, when I pulled up the slide here to talk about futures, we were actually down about 0.15 to 0.2%. Right now, markets are relatively neutral in response to the release on corporate earnings. So again, not much market change here. And to be fair, I actually understand why, because actually most companies performed well. They actually surprised. Now, again, you have to considering the fact, for the winners and losers, which ones are the larger companies. And I think that's where we really come to a neutral standpoint. Because if you look at this, you'd see that most companies did beat. Some not that much, some working in double-digit territory where they did really well. Even iRobot Corp as well, coming in with 138% surprise. But you see companies as well down here, a lot of well-developed companies like Hasbro, you had McDonald's as well, getting a 5% miss. These multi-billion-dollar companies, again, can hold a lot of weight here, right? If McDonald's misses and has a 2% decline in its stock or something along those lines, that can, weigh in on a lot of the positivity that you see here between a lot of different companies. But there are some respectable companies throughout the ones that won to the upside. I'm not going to try to be biased. Definitely did better than I think many people were expecting, right? Now, I want to go ahead here and, again, talk about, well, first off, answer this question. Is this going to impact stock buybacks? We don't have enough information yet, guys. This is just one day of corporate earnings. And we've got not only a few days coming up this week through, obviously today, we've got 224 more companies coming through, 187 and on Thursday, and then 41. But next week as well, we've got the real bulk of the earnings period coming through. All right, that's going to be in October and then also in November as well. So those are really the two major weeks, and then it starts to thin out a little bit, starts to slow down as we get out of earnings season. Okay. But I want to go ahead and address a comment that was put on the channel and stuff. Because again, guys, I love when you guys leave positive comments, and I also love when you provide, I think, what would be seen as positive, feedback or criticism. And it's absolutely fun. I take it very well. But I think it's more than anything, when I get these points, it's usually that I didn't explain my point well enough, or sometimes because I try to squeeze so much information in, I generalize things. A lot of people were curious about, my comments that I made about stock buybacks, and how sometimes, I think this is the comment that I was really thinking about, was that I make it sound as if nothing has improved, right? And I don't want to be a doomsdayer, guys. There's a lot of people who already do that. You can go watch them if you want to have an absolute doomsdayer who says the world's going to end tomorrow. I'm not going to give you doomsday, doom and gloom, right? That's not my job. I'm here to be rational and real. But I also like to address real problems. And I think the comment had basically addressed that I had basically made it sound as if unemployment hadn't gotten any better, that wages hadn't been growing, that things hadn't gotten better for the middle class. And okay, fair point. Things have possibly gotten better maybe over the last 2 to 3 years during these tax cuts. In fact, I was actually a big proponent for tax cuts. I had been screaming for years, and I was really happy to hear that actually under the Trump administration, he was talking about doing a tax cut because it was the competitive advantage that we needed to continue to expand the economy. The problem I had was that as we got this tax cut, there were no provisions to invest it, or little to no provisions to invest in the real economy. And I knew the moment it was going to get signed, the one issue that made me a non-supporter of that tax bill was the sheer fact that I knew it was all going to go into stock buybacks. And that's pretty much what happened. The vast majority of cash came into stock buybacks. There's no doubting it, guys. We had $1 trillion, a buyback record in history of the United States, in the history of the United States, the biggest amount of buybacks over a course of 2 years because of this tax bill. And I wanted to talk a little bit about these statistics, right? They had brought up, unemployment's down at 3%. But to be fair, guys, right, I'm not going to go as far as trying to use crazy alternative statistics. I do love shadow government statistics. This is a website called Shadow Stats you can take a look at that shows you a set of readings for the unemployment rate, right? I think we all know. Right, and this is something that even Trump said, and I completely agree with him. I wish he would hold himself accountable to the same standards that he held previous presidents to, and which was that unemployment is not at 3%. That is BS. The U.S. economy is not at a 3% unemployment rate. That is, if you determine, a few hours of part-time work as being employed, if you don't include all the individuals who have stopped looking for work, if you factor those things in, you get a ballpark estimate between one of these two lines, between the broadcast and the shadow stats, right? I would say it's somewhere well beyond around 10 to 12% who are still unemployed in this economy. And that's at a peak of a market cycle. That's the really concerning thing, guys. And again, I just want to make sure we have a neutral view, right? We don't try to fall for the overly optimistic, fudged numbers that have been pushed out for the last few decades. But we also, again, don't feel like it's doom and gloom. The economy has improved a little bit, right? And of course, you're going to get that with massive inflows in the United States. And also along with that as well, he had preached something about 5% wage growth. And I don't really know where he got that number because we're more around like 3% right now. But again, besides the point, it is wage growth. And in fact, depending on what inflation statistics you look at, right, we have for the CPI, which I think most of us, again, would agree to some degree is manipulated. It does include food costs and a lot of other things that are day-to-day expenses. But again, if we take it somewhere in this ballpark, maybe around 3 to 4% inflation, well, at least we're keeping up with inflation at this point. That's good to see. So we can at least keep up with the rising cost of living, right? So my point here is this. The reason why I'm so vehement about stock buybacks and why I believe we need to go back to the pre-1980 regulation cut where we allow companies to buy back their own stock. We need to go back to the point where they can't buy back their own stock. Is because there's really only a few options you have at that point, right? You can still be an entrepreneur. You can still make a ton of money founding awesome companies, creating products and services for the free market. And at the same time, with the cash that you have, you are pretty much in a sense given the options of rising wages, hiring new people, or building new plants, or doing research and development, creating jobs, real economic growth, not putting it in some artificial casino game where you're hoping that someone else is going to buy your bags later. Or in this case, you basically have a determined way, taking the cash that was generated by your employees and staff and the company as a whole, and using that to sell your stock. That's not going to be good because it's going to put our companies at a massive disadvantage when the economy turns. What happens when we enter into a recession, when those corporate earnings dry up, and many companies either are now low on cash because they bought all their stock, or they're at a point where they've taken on so much debt to buy up stock that they're now going to not be able to service their debt, right? Those two things are gravely concerning to me. I know that if we had the tax cut we had in the United States and we didn't allow it for it to go into stock buybacks, the sheer economic boom we would have. We'd probably have 10% GDP year over year. Wage growth would be 10 to 15%. People would be at such a better point in their life, I think. There's so much missed opportunity with this. And that's kind of what makes it a little bit depressing to me as someone who wanted this position for a long time. So I know I did a little bit of a rant and rave, a little bit of a tangent, but to the comments who brought that up, I hope I answered it quite well, and I hope you get where I'm coming from, right? I'm not trying to sit here and be a czar who pushes companies shouldn't be able to do what they want to do, and things are terrible, and right, I'm not here to do that. I'm just here to explain why I get so frustrated with this, because this is really one of the major elements that's keeping our economy, one of the richest countries in the world, from being able to be, a sheer example of economic prowess, to have a thriving middle class and things of that sort that I've been looking forward to for a very long time, right? And it's funny, this isn't really an issue that's politically discussed. It's very rarely discussed. And if it's ever discussed, it's discussed, in some random congressional meeting and never actually gets put into any bills, right? We never get it actually pushed. So I think it's the issues that don't get talked about that are probably some of the most relevant and the ones that we need to address, right? Anyways, that's my 2 cents, guys. If you stuck around, you obviously must have enjoyed it to some degree. And if you did, drop a like on the video. If you guys have something you want to say on this, whether you agree or disagree, leave a comment down below. Get a discussion going, guys. I always appreciate it. And if you guys want to support the channel, there's a ton of links down below where you can find ways to interact with a variety of tools and websites that help me out. Anyways, thank you all so much for watching. I hope you all are having a fantastic day wherever you are, and I'll see you all in the next one. Stay tuned.